Welcome to the Digital LGBT Plus Global Business Summit.
It's not a sprint. This is a marathon. It's really important to build relationships. It's really important to be authentic, to be real.
A workplace governed by personal-based trust and confidence is what I see as the future of the workplace.
I suppose I see myself as a political leader who is LGBT and also who is mixed race and has a particular background and particular life story. But, my ambition as Taoiseach, as Prime Minister and as leader of my party has always been to represent the welfare of everyone in the country.
The incredible change that has happened because of people who fought for these rights in our lifetime, because it emboldens us to do what has to happen next.
How are you showing that commitment internally? The places that people outside don't see, that your clients and customers don't see. I believe that that's where this work needs to start.
You've heard me say this before, representation matters.
I think asking that question, like who's included and who isn't, and being like, do I see those people here? And if not, why not?
We are far beyond the archaic times of thinking that you must be a cis male to do drag. Cis female, AFAB, trans, and gender non-conforming artists fill the beautiful world of drag queens, kings, and gender performers.
Good afternoon. Welcome to the 8th Annual LGBT Plus Global Business Summit. My name is Darrell Schuurman, and I'm the co-founder and CEO of the CGLCC. I am so thrilled to welcome over 1,000 attendees to the summit this year, with people joining us from over 15 countries. I'll be honest, I wasn't sure if 16 months of living in this virtual world, people would still be willing to join a digital conference with over 32 sessions over 4 days. Clearly, they are willing. Even in this virtual world, our communities, our businesses, our partners want ways to come together to learn, to share, to be inspired, to connect, and to do business. I'd like to acknowledge and honor the land on which I am joining you today in Prince Edward County, Ontario, as part of the traditional territories of the Anishinaabeg, Huron-Wendat, and the Haudenosaunee people. These Indigenous nations agreed to mutual sharing obligations and responsibilities as stewards of the land and water. Today, these responsibilities and obligations extend to all peoples. These lands are steeped in rich Indigenous history, traditions, and modern cultures that are proud and vibrant. It was said to me, it's important to take time to acknowledge the land we are on because to have a clear vision of where we're going, we need to know where we come from. And that's true. But sadly, when we do take the time to really look back, we realize that it hasn't always been kind, especially for our Indigenous communities. Last week's discovery of the remains of 215 Indigenous children's bodies at the site of a residential school in Kamloops, British Columbia is horrific. CGLCC shares the sadness and anger that we are all feeling upon learning of this tragedy, and especially the trauma that has been stirred for those whose lives have been personally impacted by the residential school system. I would ask that we not forget the injustices, the mistreatment, and the dismissal of human rights on our Indigenous community that have persisted for centuries. This past year has been difficult for this country. We've seen the surge in anti-Asian hate crime. We continue to see anti-Black racism. And yesterday's tragic event in London, Ontario, a targeted attack on a Muslim family, was yet another example of the pressure minorities are facing and why we must continue to work with each other to stand up against hate and stand up united for our communities. So I know that this is the LGBT Plus Summit, but over the next few days, let's ensure that conversations and actions around equality and inclusion extend to all. So the theme for this summit this year is New World. We wanted this year's summit to really be forward-looking. We wanted to bring inspiration, hope, excitement about the future. We all know that the world that was last February is a completely different world than what we're going to be living in. We wanted to challenge each of you to start thinking, to start preparing, to start building this new world. And yesterday, we got down to work to take that challenge head on. We had the privilege to convene a roundtable of executives from over 70 Canadian and global companies to discuss LGBTI human rights and the role that business has in creating change. The focus was on the UN Standards of Conduct for Business, Tackling Discrimination Against LGBTI People, released in 2017. And we talked about both the social and economic impact that is created when businesses actively participate in supporting LGBTI equality. Minister Champagne, the Minister of Innovation, Science and Industry, announced the federal government's support of the UN standards and encouraged corporate leaders to sign on to these standards. So why is this important to us here in Canada? We'll be formally releasing our latest national LGBT business landscape study next week. It's a study conducted by Deloitte. But in that looked at, in part, the challenges our businesses face here in Canada. And from that research, we know that 25% of LGBT plus businesses have faced discrimination because of LGBT ownership. 31% have purposely hidden the fact that they have LGBT ownership. And 23% have actually lost contracts because of LGBT ownership. So for those of you that think that the battle LGBT people face is history, well, it's not. We may have protection under the law, and RuPaul Canada may be the most watched show on Crave, but we still fear and face discrimination. I'm actually not sure if it's the most watched show on Crave, but I watch it all the time. So these standards are important because we know the power that business has in driving change. Corporations, large businesses, SMEs, all have the power and ability to make a change. As my friend Connie Stacy said yesterday, everyone has an obligation to participate in making this a better world for everyone. We're using economics and our collective economic power to challenge continued discrimination that the LGBT community faces. We saw this in the US decades ago, where economic equality was an important element for the civil rights movement. And we're seeing that now again with new support mechanisms for Black, Indigenous, and women-owned businesses. And one of the ways business does this is through procurement. Companies implementing inclusive procurement policies and practices are creating economic empowerment for diverse-owned businesses. That is why supplier diversity is such an important part of driving change and bringing about equality, and is included in one of the UN Standards of Conduct. Now, tomorrow we're going to do another session on these standards, and I would encourage everyone to join that, to learn more about these standards and what they can do to continue to drive change here in Canada and around the world. At CGLCC, our work is to support the more than 100,000 LGBT plus businesses across this country. We all know that small businesses are the engine that drives the economy here in Canada, and LGBT SMEs play an important part of that. What we are doing at the Chamber is striving to create a truly inclusive Canadian economy by ensuring these businesses have the opportunities, connections, and the access they deserve. We are creating economic empowerment of the LGBT community through entrepreneurship, and ultimately we are driving social change through the power of business. I'm optimistic for what lies ahead for our LGBT business community, and there's 4 reasons why. Because I see the growing commitment to LGBT plus diversity, equity, and inclusion, specifically to LGBT supplier diversity at the corporate level. Over the past year, we have seen significant growth in our own corporate membership. We are now working with over 45 corporate and government partners who are saying, we want to do business with you, not despite that you're LGBT, but because you're LGBT. Second, because of the commitment at the federal government level to ensure that the voice of LGBT plus business is being heard and is at the table through their commitment to inclusive trade and through their efforts on inclusive procurement. No, I know that they're not there yet, but we're getting there. And my partners at CAMSI, IWSCC, and WVE Canada are continuing to work tirelessly with them all to ensure all diverse businesses have the opportunities and access. Third, because of our supporters. Academia, I am so thrilled to be building a strong partnership with Carleton University and the Sprott School of Business, and there's some exciting stuff coming down, and I can't wait to share that with you over the coming months. But mainstream business groups like Startup Canada and the Canadian Chamber of Commerce, who all share a common goal. Other civil society organizations like the Dignity Network, Pride at Work Canada, and our network of global LGBT chambers of commerce, all working together to advance LGBT rights. And all of you here taking the time out of your schedule to be with us. Everyone who understands the importance of an inclusive economy, and that list is growing longer every day. And fourth, because I've seen the resiliency our businesses have. Our LGBT business community is strong. They are unstoppable, and they are ready to take on this new world. And they have a small but extremely dedicated, passionate team here at the Chamber that is here to support them every step of the way. So a very quick shout out to my team, Dale, Colleen, Leah, Ryan, Paige, Kyle, and Gandhi. Thank you for the work that you do. This summit would not be possible without the support of our corporate and community partners. So to our title sponsor, TD Bank Group, our platinum sponsors, Scotiabank and IBM, our gold sponsors, EDC, EY, Air Canada, Carleton University, Sprott School of Business. To our silver sponsors, BDC, RBC, BMO, Sun Life, Accenture. To our award sponsor, Kellogg Company. And to all of our session sponsors, friends, and event partners, a huge thank you. It was through the generous commitment of each and every one of these partners that we were able to make registration for the summit free. Our goal was to ensure that we were making this as accessible as possible to everyone, and we did not want to add financial barriers. But if you do like the content and programming, please feel free to make a contribution in the donation box below. And as an FYI, donations made to either the CGLCC LGBT Leadership Fund or the Bill Pallett Youth Leadership Fund are eligible for charitable receipts. A couple last housekeeping items before we officially start the summit. I want to acknowledge and thank our translation partner, AI Media, who are helping us to bring you live captioning and translation in 3 languages, English, French, and Spanish. If you would like to access captioning and translation for any of the sessions throughout the entire summit, please use the closed captioning button at the bottom right corner of the video. Select CC1 for English, 2 for French, and 3 for Spanish. An important part of our summit has always been creating connections. And although we're not in person again this year, there are still several ways that we're trying to create those connections. So on the left-hand side of your screen, you'll see the networking tab, where over the course of the next 4 days, you can connect directly with attendees. Please don't click it now because you'll be kicked out of the session, but do it after this. Now, if you're not the type of person to just start having a virtual conversation with someone at random, you will notice a feature under the networking tab called Matches. Here you can answer a couple questions, and it's going to match you up with others that have similar interests. It's a great new feature, so I would encourage you to try it out and make some new connections. And on the bottom left corner, there's a Contact Us chat function if you need any help throughout the summit. So we have an exciting lineup in store for you over the next 3 days. We have our Unstoppable Talks. We have a series of discussions with LGBT+ leaders. We have our annual EY pitch competition. We have our supplier diversity matchmaking. And of course, we have our annual economic update beginning right after I stop talking. So let's look forward to what we have in the next 3 days. And with that, I want to thank you for joining us. Please enjoy the summit, be active participants, and make sure you take the time to connect with others. And now a few words from our presenting sponsor, TD Bank Group.
Hello, and thank you for joining our annual 2021 Digital LGBT+ Global Business Summit. My name is Rupert Han. I'm the Regional Manager, LGBTQ2+ Business Development at TD, working as a trusted liaison between TD and LGBTQ2+ community across Ontario. First off, I would like to congratulate Darrell and his team for all their hard work in bringing this event to life. As the COVID-19 pandemic has deepened inequalities for marginalized communities, including the LGBTQ2+ businesses and entrepreneurs, it has also underscored the importance of strong partnerships. It is great to see that TD, as a platinum sponsor and founding member of the CGLCC, continues to evolve this partnership year over year. Together, we're helping create the conditions that the members of the LGBTQ2+ community need to feel that they can succeed and fully participate in a changing world. In addition to our support for the CGLCC, we have a long-standing history of supporting the LGBTQ2+ community and remain committed to help drive progress forward. Yet again this year, we are celebrating Pride at a time where many of us are still physically apart. Despite this, I know we must continue the momentum for positive progress for even more reasons to celebrate Pride and beyond. At TD, we believe in supporting the community 365 days of the year. We were here before June, we will be here to celebrate Pride with you this month, and we will continue to engage with you after Pride Month is over, which aligns with our motto, Forever Proud. With that, I would now like to turn it over to Beata Carenzi, TD's Chief Economist and Kim Parley, the host of Money Talk on BNN, Bloomberg, and CTV, and Vice President at TD Wealth, for our annual economic update, including a recap of the past year and a preview of what's next for Canadian business. Thank you and happy Pride.
Hello, everybody, and thank you very much, Rupert. What a lovely introduction. Hello, Beata. Nice to have you here. I won't reiterate, but again, my name is Kim Parley. I'm host of Money Talk on BNN, Bloomberg, and CTV. And Beata Karanci is the smartest person I know. She's also the chief economist and modest at TD Bank. So thanks so much for joining us. And we're thrilled to be able to kick off this discussion as part of the New World 2021 Digital LGBT plus Global Business Summit. And I love the title of this panel, Beata. It's called What is Going On with the Economy? And I think
I'd like to know too.
I know. So we figure you're the best one. Let me just tell everybody how this is going to work. We have half an hour together, and the plan is 15 minutes of that time is going to be dedicated to some questions that I have about Beata to talk about what's happening with the economy. And then the last 15 minutes, we will be taking your questions. If you look at the chat function on your platform and you put your questions in there, I will be receiving those. Send them anytime. Send them as we're talking. I will keep track of them and make sure we get to them. And I'm a big fan of audience questions. I find the best questions come from there. So don't be shy. Send them in. Beata, I'm going to start with the title. We'll talk about the loonie and housing and tourism and all sorts of things. But let's just start with what the heck is going on right now in the Canadian economy.
Well, I may not feel it because I think a number of provinces are still under restrictions, and I think people would like to be freer than we actually are at this stage. But every single month that goes by, we're seeing progress on the vaccination rates. And in fact, Canada has one of the fastest vaccination rates now in the world. So, it's quite a feat from how far behind we started and how much angst. That starting point, however, has left an impression on the economy. So, we had about 5.6% growth in the first quarter, incredibly resilient, right? Like if you remember December and January and February, these were in large part lockdown months, especially for some big heavyweights like Ontario. The second quarter, again, you saw more amongst Quebec and Ontario, and then that was a tough slog. So we are not getting very good numbers there. You would have seen them in the jobs report, 2 monthly declines in a row, largely centered in places with lockdowns like Ontario. And the economy naturally slowed. Still resilient because we don't think we're going to see a negative print there as people and businesses have adapted, but certainly not the momentum we're seeing in the US. To give you an idea, we think we might have about 2% growth in the second quarter in Canada. And the US numbers are between 11 and 12% growth in the second quarter. So, we're happy to keep our head above water in this economy, but certainly as we hit into the third quarter and beyond, we should start to see those US style growth rates pop in. And likewise, the job market respond accordingly. So we're going to hopefully keep gaining momentum, Kim. That's what I'm hoping as we go forward.
Let me ask you, because I remember when we talked, and I've lost track because we've talked a lot over the past little while, but I would say during kind of, I'd say the lows of the pandemic, I think when we really didn't have visibility, I know one thing that you and I talked about is just, it's a big word, bifurcation, just the fact that, it is hitting different people differently. So when I hear these bounce back numbers, I think they're fantastic, but I'm curious, are you seeing, what kind of differences are you seeing in terms of maybe who the pandemic hit economically, and also who's going to be the one to recover?
Right. So, the easiest way to think of those is if you were in a marginalized community before the pandemic did not improve your situation, and that marginalization would have deepened. So, racialized community, LGBT, obviously. Women, mothers in particular, with relation to daycares being shut down and schools for periods of time, that creates pressure on the home front. So all of these factors were amplified. I will say that, as economists, we always like to compare ourselves to how are we doing to others? Are we falling behind or leading? Because then that tells you where you need to do policy adjustments by looking at other countries. If we do look at Europe and the US, Canada is actually doing better across these marginalized communities than what you would expect. And part of that is because the income supports from the government side have been more generous than what we're seeing in Europe, about on par with what we're seeing in the US. And so that's helped quite a bit in terms of just helping keep people afloat and weathering through this period. And so that's a good thing. But certainly, you know, the true test will come in the months of not even June where we are now, but July, August, and September, if these jobs are going to come back, and to make sure they're coming back in those hardest hit areas like retail, tourism, accommodation, which tend to have a different group of individuals, more of the marginalized groups of individuals reflected in those jobs than other areas. So the true test is yet to come, but every time we've come out of a lockdown, we've seen the numbers rebound, and we hope that's the case again. I will point to one group that I have some concerns where there could be lingering, pain, and based on what we're seeing in the U.S. Is the young or the youth, that 15 to 24 age bracket. You know, a lot of these folks do rely on summer jobs, part-time work. And because a province like Ontario has such a staggered reopening that's going to be extending all the way out into August, there may not be opportunities for these folks to engage in the workforce and to supplement income, even for education or just living. And so that looks like a group where we've seen the participation rates really drop hard, like record levels, relative to other groups. And so that's one to keep your eye on. And if you're out there in a business, please look to this group for hiring opportunities, because they do look like they're the harder hit group on participation in the labor market.
So hard, especially I think, for younger people, starting off their work life, experience to get started. I've got a list of topics that I want to make sure we touch on. And let me ask you about tourism. I know that's a great interest, I know, to this audience specifically. It's an audience where you do see a lot of LGBT plus businesses operating in. How do you see, and I know you mentioned July is going to be kind of when you start to see things pick up a bit, but maybe even airlines, or are we seeing anything in terms of traffic?
Yeah. So again, I'm going to look to the US because they're ahead of us on the reopening. So they're a really good benchmark of what we should be expecting here in Canada as we continue through the summer. If you look at what their pass-through people through the airports is under the TSA, this time last year, they were just over 240,000 daily movement. And they're at about 1.5 million now. And a normal would be about 2.5 million. So they haven't fully normalized, but certainly that's a pretty big increase in that period, with most of it occurring just in the last couple of months. So if you are seeing cheap airfares, now would be a time to get it, because what we are seeing in the US, and we do expect to happen in Canada, is their airfares have risen 10% in just a single month. They're not back to pre-crisis levels. So you will continue to see this pressure, because it does take quite a bit of time for these industries to adjust. So Canada, we're probably 1 to 2 months of seeing that experience come through for the tourism industry. And I think most important is, what will be the state of our borders? Because, right now the tourism industry is completely reliant on domestic tourism. However, the spending multiplier tends to be higher with international tourism. So these are folks who are picking up more and spending more in accommodations, eating out, attending events, which are not really available right now. So that's going to be to me, that's a true normalization, is where we can get our borders open to people who've been fully vaccinated, which the science seems to support, and how fast that can happen to really underpin some of these jobs. Otherwise, you get stuck in this structurally lower rate because you're only depending on one source of demand, which is the domestic side.
I wonder if, and I don't have a ton of time that I can explore, but just maybe quickly are you concerned about what I'll call the permanent destruction of some travel? I mean, in tourism, I'm not going to take a vacation by doing a Zoom call. You couldn't pay me enough to do that right now. I'm so sick of Zoom calls. But for business, I feel as though we probably learned that, you know what, I don't always need to fly everywhere to do everything. So is that going to affect anything?
Yeah, that'll affect. So what we're hearing from our partners, our TD Bank in the US, is what they're seeing as the movement is picking up is that those areas of tourism that are in prime locations, for example, on the ocean, as an example, as opposed to if you have a hotel off of interstate highway. So, this service the business community as opposed to necessarily vacationers. There's a big difference in the performance of these businesses. So those who are really tailored to the retail consumer are seeing this pop in demand as opposed to business. And so that creates that lingering scarring effect. And they probably have to continue to discount their rates because they're going to have to attract people who are there on vacation in maybe less desirable locations near a highway, as an example. Offer them things like shuttle service to the beach or something to that effect. So that same phenomena is likely going to happen in Canada, and maybe more so because Canada has tighter border restrictions than what we're seeing in the US and even countries in Europe right now. So we do have some of the tightest border restrictions. And this is why I'm saying we really have to think through that pathway and speed at which we can think through people who have been fully vaccinated. What we are seeing in Europe, and frankly, it's taking off almost universally, is these international vaccine passports. And this is where people have to do proof of vaccination, full vaccination, or a PCR test, or show that they've recovered from COVID in the last 2 weeks, so they have natural immunity, in order to enter a country. And the same requirement of your own citizens to leave and come back. So that tells you that would likely lead to a structurally lower level of tourism because you're not getting the free flow. However, you're much better off in that environment than if you only maintain your domestic borders closed and rely on that group.
We have, I have to say, these questions coming in are super fantastic because they're exactly what I'm about to ask you. So I'm just going to quote, actually, one of the questions coming in, and that is just the Canadian dollar. What are your thoughts on what are going with it? Because boy, oh boy, has it ever taken off in the past little while, along with, I'll mention, all the markets. I mean, we've got markets near all-time highs.
Yeah, so the Canadian dollar, well, let's face it, it surprised us. I thought 80, 81 cents would be like a topping point for it, and it pushed through. So I think the easiest way to think of where the currency is going is think of the main driver. So when you're trying to look at the market and figure out what's explaining the move today, don't do that because currencies are very volatile. So we don't want to worry about what the day-to-day is. We do want to think through trends. And so one factor is the Canadian dollar tends to turtle when there's a lot of risk. But what we've seen is risk abate from the global economy because of the vaccination of populations. And so the money has flowed out of the US dollar into the euro and everything else. But that's movement looks like it's sort of done on that front, that risk on sentiment, as you can tell through equities and other factors. So then the other thing you want to consider is domestic fundamentals, but in particular commodities, because as much as we consider ourselves a diverse economy, international investors don't. They think, still Canada is very much a commodity currency. And as you know, Kim, that has been an asset class across the board. Doesn't matter if it's energy, base metals, agriculture, that has really taken off. And in fact, many like copper and others, metals and minerals, are at record levels of prices as you get this mismatch between demand and the ability to facilitate supply in these areas that have a lot of inertia. So that's been the biggest driver lately. And then as we go forward on the Canadian dollar, then you want to start paying attention to the interest rate differential to the US. So if the Bank of Canada starts to sound more hawkish and more willing to pull the trigger on a rate hike, that's going to add a little bit of fuel to the Canadian dollar, because right now that's not really the expectation priced in the market. So if you think through all the turning points, the first one's done on risk. The second one on commodity prices is likely done unless these prices gain a little more, but they look like they're getting toppish. So the last piece is what happens on the interest rate differential. So we should be nearing a peak. I say that now and watch it'll be at parity next week. But that's how we're thinking of it. What are the three drivers and how are they performing?
And there's a question coming in too, and that interest rate differential again, just in for the audience, plain speak, what the US is setting rates at and what Canada is setting rates at. And Canada is actually one of the few central banks to actually say, yeah, no, we're thinking about things. And, we haven't seen that from the banks. So when do you expect them to do something?
Yeah, so for us, they're already tapering their asset purchases, right? Yeah. So quantitative easing, buying assets. And so that's already pulling a weight off of the yield curve because they're not in there soaking up supply. So that's good. The Federal Reserve is not doing that, nor have they even communicated the timing of when they're going to do it. So certainly the Bank of Canada is being more proactive. And what that's telling us is they're probably ready or getting ready to raise interest rates. We think it'll be towards the end of next year, not this year. They're going to continue to roll off asset purchases, monitor markets. What typically happens is it's when the US decides to ease on quantitative easing that we're going to see a pop in our yields, because there's about a 70 to 80% correlation between Canadian long-term yields and the US. So we don't really fully function on our own dynamics. It's mostly an international pull. And so I would lay a bet that they want to make sure that transition on the US side goes smoothly for us because we get pulled along. And then as we get into next year, we see the job market performance. If we're moving closer back to full employment, they would be ready to raise rates. Like, they have to be mindful at this stage that there's other risks percolating related to equity markets, related to housing. So as much as they would like to wait for this like perfect outcome of the job market at full employment and the economy, every sector running full speed, I don't think that's a likely outcome. So that's why we're thinking next year.
Awesome. Okay. You mentioned housing. I'm actually surprised that hasn't come in yet, but again, some other good questions coming in. We'll get to them. But, I kind of joke, I hail from New Brunswick. And so I think for the first time in forever, their property prices are moving up. It's been a long time. But I'm just going to say housing everywhere, low interest rates, risk on. I mean, we've seen things move up and up and up. So what do you see coming?
Well, we've seen a little bit of a cool down just in the last month or so. And we're not quite convinced that that's going to be sustainable, because what we think is that you would have heard the regulators have tightened a little bit on the qualification rules. And so what we probably saw around that, March, April, May period is it's like rushing in to get in before these qualification rules tighten, and then we'll see some relaxation. Also, as people start to move around and maybe travel even within Canada, maybe a little less focus on the housing side, as we're all sitting there surfing what's available in our neighborhoods all day long because we have nowhere else to go. So we might see some of that type of fatigue play through in the data. But if you just want to get to fundamentals and put aside the cyclicality of the market, all of this demand that you mentioned and the fact that it's universal across the country is all coming off of domestic demand. Like, we haven't even had our borders open, and we haven't had international flows come back to normal, which are about 400,000 a year, which soaks up demand in the rental market and then international investment. So even as the domestic demand starts to maybe get fatigue and subside because affordability has eroded, we still have this other new component that's likely going to start to step in, and that'll be materializing next year. So we should see, I think prices have some fundamentals to support them, maybe not to continue on because we've seen these 20% pops, but at least not to recede. So we could see some sturdiness in prices. And then the one thing I would just be, cautious of letting our viewers know is when you see things quoted in the newspaper, like average home prices declined by X, average is dependent on what's getting sold. So the more the market skews to the condo market, the lower the price point. So your average price will be falling as a result, but it doesn't mean that if you were to compare apples to apples, that prices are falling. So just be aware of how preferences change, because we've started to see a shift from detached markets back to condo because the affordability erosion has been so great in detached. So that could lower your average price, but it doesn't mean there's a deal to be had out there yet.
It's interesting. We should maybe start asking for when they release this stuff for average detached and semi-detached and condos. That might tell a better story. You've always got the details behind the story. Listen, another good question coming in from a dear friend of mine, Marisha Zarsky from Velocity Partnerships, and it's a really good one. And it's, what are some of the economic disruptions that may not be on the front page of the news, and how should small business owners be preparing? So maybe what's on the horizon? Because there's a lot of good stuff, a lot of reopening, a lot of movement, travel, that kind of thing. But obviously, rates and loony can either work for you or against you, depending where you are. What should be people looking at?
I think one of the things that really has struck me from this pandemic experience is our supply chain dependencies. and some vulnerabilities on that front. And I don't think it gets enough focus here in Canada. Like we get it on the PPE and we get it on the vaccines because it's been, so much at the forefront. But ultimately, we're trying to do a transition to being, net neutral on emissions. So a climate change transition. We don't really have the infrastructure in place. This could add quite a bit of pressure in certain segments of the economy. If you're a business supporting those, so you're in that emerging technology, lots of opportunity. If you're one of those not, right, more on the older technology or needing to improve investment to help on these efforts, there could be some dislocation happening there. And so I think that's something really that's top of mind for us because the pandemic brought home the healthcare supply chain, but we're now seeing it through the commodity cycle. What's happening as people start to think through, copper is going to be really in demand for energy transmission. And that's obviously so fundamental to the climate transition. So a lot of things for businesses to think through, maybe just outside of their immediate universe of what their market share is and what their market is, that there's these external forces happening and they could be experiencing input cost fluctuations that perhaps they had not experienced before, hadn't thought of these links into their supply chains. So I would say just be aware of that and think through your supply chains, where products are originating, what are those inputs that you're getting, and how might they not just stay high now because there's a supply-demand mismatch, but how might they evolve over the next 5 years as we go through these transitions globally? Because the US is now back on board and Europe is pressing really hard on climate change.
What you touched on a bunch of things there. I was just taking notes while you were talking, but when I think about the impact of ESG coming in, and also more from how companies choose to spend their money, who they engage with, the kinds of vendors they engage with, just the importance of supporting LGBT plus communities and vendors. And actually, I'm also keying off of the statistic that Darrell gave at the beginning. I think it was that 23% of LGBT businesses, were denied contracts because of that. Are you seeing trends, I'll say, to build back better?
Well, I think this is where we're starting to see a bit more shareholder activism. Now, this doesn't necessarily help the smaller businesses, but we do know that larger businesses do set the tone, right? So the shareholders have a lot more of an active approach in terms of best practices that they expect out of larger businesses, which smaller businesses can cue off of in terms of where the sentiment is shifting. And so from that perspective, exactly as you said, ESG, which is shocking in my opinion, that we went through this pandemic and everybody thought, oh no, we're going to all have our entire focus on the healthcare sector and not on these other really important issues that are happening on inequality and environmental shifts. And yet everything bubbled up simultaneously, which was good to see. So I actually think that if you look to what's happening on larger businesses, whether you are in that space or not, that's probably what's coming down the pipeline for you. And that's a positive thing in my opinion. Because the shareholders are not just the big institutional shareholders, they're folks like you and I who are investing and expect a certain standard out of businesses. And that, in my opinion, and what we're seeing in global sentiment, is the majority of people. And so while there are always going to be those who marginalize you, I think the wind is at our back on this one. And it's a positive thing.
All right, I've got 6 minutes, Beata. Are you ready for some rapid fire? Because I got a bunch I got to get in here. Here we go. I'm giving you a minute. First question I'm going to give you is from the audience. With all the spending, government spending and debt, do you see inflationary pressures such as wage growth inflation?
Yes, but we see it more a story that may come in next year as opposed to this year. So this year's story is all about just way too much demand hitting when supply has to adjust. And I liken it to, you have your racehorse penned in and the gates open and then it takes off, right? And so that's what we're seeing in demand and everybody kind of standing on the sidelines. So don't, get too concerned. I know you're a business and it may be harder to entice people back to work, but that's not going to be the situation a year from now. A year from now, however, we will have eaten up this excess slack. We would have been more into a normalized economy. We hope we are. And that's when true demand side dynamics come through with a tighter labor market. So when it's the tightness of the labor market, that's when you get the wage push inflation. And so that's more of a phenomenon, we think, for like the second half of next year.
Okay, something to watch for all those people hiring and trying to get things are expanding. Next one is how essential is immigration to the Canadian economy? We know we have a low birth rate. Do you worry that COVID-19 has impacted those efforts? And again, that speaks perhaps some to wage inflation too, if you can't find people.
Yeah, I'm not worried about immigration flows into Canada. Canada is highly desirable, and we have very high targets relative to what we see in other countries for the size that we are. And we do quite a prescriptive approach on economic entry, which is trying to be modeled by the US and others. And so I think when we look external, people deem Canada to be a great place of opportunity and greater equality than what you're seeing in many other regions, healthcare access and other factors. So I'm not too worried about that. We're seeing a cyclical impact, but that should change. Certainly the universities are really trying to get the government to allow more people in through that channel. That's an important channel for the rental market and for other factors in Canada. So a good little barometer to watch is what's happening on the policy, because as the universities, if they can get the students in, and then we'll start to see this pick up more broadly.
Another question, very focused on the labor market. These are good questions. What will the impact of baby boomers retiring from the labor market impact the business landscape?
Well, this goes back to the immigration question.
Exactly.
In terms of why we need, certain cohorts to come in with higher skills to replace the baby boomers. Baby boomers' biggest impact is there's a few areas. One, their consumption patterns change as you age. And so, as you know, you do less things in terms of vacation and goods. You're not in your home buying stage. You might be in the downsizing, but you're not in that accumulation stage. And so that affects that shifted consumption patterns affects how your economy grows and where the demand is. Aging populations also tell you that you have less entrepreneurship that flows out of it, because people who are creating businesses and taking risks tend to be in their 20s and 30s. So another reason why we see so much of the entrepreneurship spirit coming through immigration. And that's another reason why it's so important. And then, of course, the pressure on the deficit and debt side through the healthcare and social supports that are needed. So there's many different pathways. But on the flip side, this boomer generation is a very wealthy generation. And so there's this huge wealth transfer that's going to be happening, intergenerational wealth transfer that's going to be happening as well to support those younger generations for those who have it. So if this is where the inequality comes out, right? Where you get intergenerational wealth being passed down, but if you're not part of that, you get stuck. But there is an element of that coming through, probably a good 10 years off still on that front.
Okay, Beata, final thoughts for this audience, just in terms of maybe things to be watching out for in the next, I'll say 6 months, because I know that, which I know is short term for you, but what things to think out?
Well, it's always about the pandemic these days. I think, we're going through a reopen stage. My biggest concern is that we've just spent 1.5 years in very cautious and trying to understand the evolution of this virus. And now we're hearing about Delta and this ongoing migration of viruses. So what I don't know is how governments are going to react. And if you're a business, you don't know if you're going to be shut down in the fall if this turns into a flu-like season. So while we're moving to reopening, the sustainability of it is what I'm not sure how governments are going to treat. Are they going to be still reactive to cases? And are we going to be comfortable with higher numbers if this turns into a flu-like outcome, even with vaccines present? So that's the first. And then the second is the labor market dislocation, because the next 6 months will be very telling if we are bringing back people who have been displaced in these really vulnerable areas by every aspect, right? Race, age, gender, everything. So this is going to be really telling. And if we don't see improvements that are material in that period, then that tells you we're going to have likely structural unemployment, which is not good, because that's actual scarring. And as a business, it's much more difficult to engage the labor force when you have people whose skills have atrophied or are unable to enter back into the market.
It's a lot there. I can't think of a better conversation just to kind of lay the foundation, I think, for what's going to be happening for everybody over the next little while. Beata, thank you so much.
My pleasure.
Beata Carranza, she's Chief Economist at TD Bank. Just a reminder, the next session, we spoke a bit about ESG, is called ESG in Recovery, Jamie Watt from Navigator, he's a great speaker. Brian Gallant, also great, from the Canadian Centre for the Purpose of the Corporation. And Donalyn Turner from Diverse Advantage Consulting also joining. It's going to be a good conversation. That begins, I understand, at 1 p.m. Eastern, 15 minutes from now. So that is what's coming. And I just want to thank everybody for the opportunity to come speak to you today and enjoy your next session.